Looks like the Trump trade is fading away and the markets are looking pretty precarious right now. So let's start with looking at SPY. I'm going to zoom in a little bit here, talk about the Trump trade. Okay, so this is that huge gap up that happened after Trump got elected. And you will see that, with gaps, what happens is there are two ways of trading gaps. One is you fade the gap, and then the other way is called a gap and go situation. And the gap and go you will see mostly with significant earnings events. Usually, when that gap is supported by a strong fundamental reason, the stock continues to go in that direction of the gap. So in this case, Trump got elected, markets love Trump. So if you ask the question, what fundamentally changed about the American economy? Nothing has changed. It's just that market know that Trump will be the next president. That's it. So this huge gap up was basically sentiment euphoria driven move. Now, of course, hindsight is 2020, so it's very easy to see that that gap has faded away. So if you look at SPY, so this is a huge gap. Markets went up for a few days, and then the whole gap has been given up. So where do I think the markets could go next? So first of all, let's quickly talk about the indicators for SPY. If you look at SPY, RSI is sharply dropping, and we are nowhere near oversold area. So there is a lot of room to fall here before markets get oversold. Another interesting thing that you will see is something called a DMI crossover happening right over here. And I keep pointing out DMI crossovers to you because I think they're significant, especially when they show up in major market indices. So one example is here, DMI crossover, and markets just continue to tank. When markets are oversold or overbought and you get a DMI crossover, it becomes even more significant. So in our case, SPY did touch overbought and started falling, and now we are seeing a DMI crossover. So just keep that in mind. My guess is that if markets continue to dump like this, the way we saw last week, SPY could fall all the way down to this point here around 576 and do a gap fill before things turn around again. Now, of course, this will be a great scenario for swing traders because, as you know, in our group, I was constantly talking about markets are so overbought, it's impossible to find bull call spreads, and this is really good. So if this happens and markets sell off like this, SPY goes to a gap, does a gap fill, and then recovers, then we'll have plenty of opportunities to buy the dip and go bullish after this point. Also, if you're following the progress of my trading algorithm Maya is also in a holding pattern since October 20th. So first, the election volatility caused it not to take any trades. This massive spike that happened after Trump got elected sent the markets into overbought zone instantly, and then Maya didn't take any trades because of that too, because that is also one of the rules that I've coded into Maya, is that if markets are overbought or oversold, or if volatility spikes up, it just becomes conservative and doesn't take any trades. So we are in a holding pattern, and then the best scenario for Maya to start trading is if SPY does a proper gap fill and recovers. That's when it will start taking bullish trades. So anyway, let's switch to QQQ and tell you why I think this gap fill is likely. Of course, nobody can see the future, so you never know what's coming next. So, but if you look at QQQ, this is really interesting. I keep posting in our group that SPY is the well-behaved cousin of QQQ. So QQQ or Nasdaq is heavily tech-driven, growth-driven ETF. And with growth, what happens is when markets tank, growth is where the money comes out and the balloon pops and all the air comes out of the balloon, and you will see first QQQ selling off. This is a gap. QQQ filled that gap and has continued to sell off. So QQQ is almost near the gap fill at 492. So since Qs usually lead SPY, and SPY is also full of a lot of growth and tech stocks, my best guess is that we should see a continued sell off next week, and SPY follows the path that Qs are taking and does a gap fill before we get a recovery. Also note that although SPY is about to make a DMI crossover, Qs have already made that. So we could easily see a gap fill here, and really if you ask me for my ideal scenario, it'll be awesome if the markets actually sell off and Qs go down to 484, almost to the lower end of the Bollinger Bands, and then recover from there for a nice December end of the year rally. So again, this is just my opinion and my ideal scenario. Markets obviously don't care at all what I want. Markets do whatever they want. So if this doesn't happen and markets start recovering as early as next week, then I'll have to change my trading to adjust to that. Now, since I'm using QQQ as a leading indicator, I also want to point out EMAs. So if you watch my market outlooks, you will see that I always bring in 82134 EMA crossovers and point out to you if there is a significant shift happening in the markets. So for example, this is the chart of QQQ. Whenever you see the blue EMA, which is the 8 EMA, crossing below the 21 and 34 EMA, sizable correction or sell-off is in progress. So this is one example. In April, market started selling off, and then this crossover happens, and then everything just falls apart. Similar thing happened in July. Markets gap down, start selling off, and then once this EMA crossover happens, they continue to sell off. So this is a very sizable correction. A smaller version of this happened in September. You can see that. So right now, if you look at Qs, the 8 EMA has turned bearish, but it's nowhere near any kind of crossover. So we'll just have to watch how deep this sell-off is. But the reason I'm showing you this is, if you see 8 EMA cross below 21 EMA, if that crossover happens, there is a high likelihood that this sell-off will continue. It could continue all the way into December before markets start recovering. And we all know there is a phenomena of Santa rally in December, but that happens toward the last 2 weeks of December. So we still have approximately a full month before the end of the year. And if this EMA crossover happens, I will become very cautious about buying the dip. So if the crossover happens, let the markets do what they want. Let that EMA start turning bullish before you start taking any kind of bullish setup. So, okay, a quick look at some of the divergence indicators that I've been pointing out for several weeks now. If you look at DXY, for example, US dollar index, starting 9:30, the dollar index has been constantly going up while the markets have also been going up. So that is one of the divergence indicators I use. And when you start seeing DXY and 10-year treasury yields going up and equity markets also going up, it's just a time to become cautious and reduce your trading volume. That doesn't mean that a sell-off is coming tomorrow. It could take like 1.5 months to play out. But that is, whenever I see that happening, I start pointing out in a group that time to get cautious. Reduce your trading volume. Don't go, if you're bullish, don't be overly bullish. Keep an eye on DXY. Also keep an eye on TNX, which is your 10-year treasury yields. It's telling you the same story. Similar trend there. As long as TNX and DXY are going up and they have an uptrend in place, I would just become cautious about taking any kind of bullish trades. Almost all of the major market moving stocks have reported earnings. Now, there is one stock which could change everything, and you know which stock I'm talking about. That is Nvidia. And Nvidia has earnings on Wednesday at market close. So that is going to make things very difficult because it has happened many times in the past that markets are going in a certain direction and Nvidia comes out with blowout earnings, rosy guidance, and things change instantly. I mean, this one stock has become so huge now that it can change the entire market direction. So, if you remember the SPY and QQQ charts I was showing you, if Nvidia disappoints on any metrics, now do note that the expectations from Nvidia are so high that even if they miss on one single metric, the stock will sell off. And if Nvidia starts selling off, then that whole scenario I was presenting to you that we could get EMA crossover on the indices and a full blown correction, 8 to 10% correction. This is that trigger that can take us there. Having said that, if Nvidia comes out with blowout earnings and amazing forward guidance, then this pullback will be very short lived and markets will just recover from here. So just be prepared for this massive binary event on Wednesday. So the biggest market moving event next week is Nvidia, and it'll be interesting because Nvidia reports earnings after market close, and then Thursday morning we have jobless claims, which is the only significant macroeconomic event of next week. So we should see like a huge move in the markets on Thursday morning. So if you have a small account, I highly recommend that you save most of your capital for just Thursday and Friday. If you want to nibble at one or two trades, maybe take a dollar wide spread, so risk $50 per trade. But I would say just sit on your hands, wait for Nvidia, and then trade mostly on Thursday and Friday.